How's it going, subscribers? Today we're going to be talking about the company and the stock Sprint S. So now when we look at Sprint, we can see the short term has declined 0.5%. We look at the 1 week, we can see it's increased 5.64%. We look at the 1 month, down 1.64%, not too bad. We look at the 3 month, down 2.44%, still not too bad. We look at the 1 year, we could see that it's actually increased 16.54%, which is pretty good because even we can see these low points are still up about 8%. So this is good. Now, when we look at the 5 year, we could see that it's actually declined 32%. So it looks like something is. So it looks like in the longer term, Sprint has been sort of declining. So what's going on here? Now, when you look at the volume, we can see the volume is at 6 million, average volume at 13 million. So it seems people are less interested in it as of right now. Market cap at 24 billion. So this is a lot, 24.55 billion, massive amounts of money. PE ratio not looking good. Got the dividend yield, doesn't offer any. We got the 52-week low, $5.04, 52-week high, $6.61. So it's sort of in the middle right now. So the good thing about Sprint is sort of stable. When you look at the news, we can see that there's an investigation going on with Sprint. So this is not necessarily good news for Sprint. So as long as Sprint and also Nokia can overcome these investigations, then everything will be all good. Now, when you look at the analyst rating, among the 20 analysts, 75% are saying it's a hold, 10% are saying it's a buy, 15% are saying it's a sell. Now, what the buyers are saying is that Sprint Spectrum holdings are the best in the industry to meet the demands of the 5G wireless technologies. Its 2.5 gigahertz position will enable far wider channels across much wider territory than rivals will be able to offer. While Sprint's network lags rivals in aggregate, it serves portions of the U.S. extremely well. Customers in these areas should flock to Sprint. The merger with T-Mobile, if approved, will create an exceptionally well-positioned wirelessly carrier with broad spectrum portfolio, solid network foundation, and the scale needed to take on AT&T and Verizon. Now, when you look at the haters, what did the haters have to say? The haters are saying that if the mobile deal fails to win regulatory approval, Sprint is in deep trouble. The firm will likely burn cash over the next several years as it deploys 5G, and it faces heavy debt maturities over this period. The Sprint network is far inferior to those of its three major competitors in most locations. Its addressable market is much smaller as a result, limiting the growth the firm could ever hope to achieve. Worse yet, Sprint's troubles over the past decade have tarnished its reputation. Even customers it can serve well may not be willing to give the firm a try. Now, when we look at the research report, we're saying that Sprint continues to struggle as its decision on T-Mobile nears. 3 stars out of 5 rating Morningstar is giving you. Economic mode is none. Fair value at $5.80, so that's what the price we're valuing it at. Uncertainty very high, and the standard is what the stewardship it is. We've got the earnings per share in the negative, but not by much. The volatility low. And then when we look at the CEO, Michael Combs, headquartered in Overland Park, Kansas,